Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss the Nasdaq AlphaDex US Large Cap Value Index and how investors can get exposure to it. Mark, certainly value a hot topic as we looked at that rotation throughout the past 6 months. Tell us about the composition of this index.
Thanks, Jill. Great to be back with you and talking about something that maybe people don't associate it with NASDAQ all that often, a value product, but we do have a number of them here at the NASDAQ Index business. This one in particular looks at sort of the top 75 percentile of securities that are in the NASDAQ US Large Cap Value Index. That's about 250 companies. So this one looks at about 187 constituents based on value characteristics like price to book, price to cash flow, and return on assets. Basically scores all those securities in the portfolio and selects the ones that score best on those type of value factors for inclusion. So the way the portfolio is built is you kind of split up that group of 187 names into 5 quintiles, 5 buckets of equal size there. The best scoring quintile gets the biggest amount of weight, and then within each quintile you have equally weighted constituents. So it's kind of a modified equal weighted index. You'll notice the concentration here is not very high. The top 20 names make up about 20% of the index weight. And then all the way there on the right side, you could see the biggest constituent, Coterra Energy, only at 1.2% of the index. So not that much bigger than kind of the rest of the way down as you work your way down here. You see other names in the energy space like ExxonMobil. You see a lot of financials in this index like Ally Financial and Allstate. And then you see a nice mix also of other sectors, which we'll get into in talking about, other ways of looking at the exposure here.
Yeah, Mark, and what's interesting, when you take a look at the market cap and sector exposure, there was a healthy representation of technology and telecom.
Yeah, so, this index does rebalance on a quarterly basis. And part of the thing that is in play here is that energy in particular, I think, has done so well for so long now, over a year and a half, that it's really been outperforming most other sectors, is that a lot of names in energy end up being classified as growth nowadays, just by virtue of how well they're scoring on that kind of price momentum type of evaluation in terms of a typical growth factor. So you don't see as much energy in this index today as you maybe saw 6 months, 12 months, or 18 months ago, because those names have, appreciated quite a lot in terms of price. Their financials have gotten a lot better in terms of, kind of more growthy type of financial fundamentals around revenue growth, around profitability. So what you see in this index is still a lot of financials, almost a quarter there. In the dark yellow is represented by financial sector companies, at least per ICB industry classifications. And then you have industrials, consumer discretionary, and then utilities also representing pretty nicely. They're all at 10% or above. The other thing I wanted to point out on this slide is in terms of the size representation, very little concentration in the mega cap names. Over 100 billion in market cap, you've got about 1/7 of the index weight is exposed to over 100 billion market cap companies. The vast majority here is sub 50 billion, so that lower end of the large cap spectrum.
And Mark, if we take a look at how this index performed relative to benchmark, what do you see there?
So the two views here is year to date, that's on the left, and then on the right hand side is basically since end of October 2020, right around the last election and when the first vaccine news came out, and when I think really the reflation trade got going in equities. It maybe got going a little bit sooner in rates and fixed income, but in equities, in my mind, end of October 2020 is when that reflation trade got going. So you can see there, the yellow line, this index is well outperforming, not just things like the Nasdaq 100 and the S&P 500, but also outperforming the S&P 500 Value Index, which is the second best performer there, up 37% since end of October 2020. This index is up just over 50% on a price return basis. And then year to date, you can see It's not positive for the year, but it's pretty much break even, at least in price return terms, quite a bit better than what you're seeing in most of the rest of the equity market. So, value, after leading and doing really well for the first year or so after that reflation trade really got going, holding on to its lead, and in many cases expanding, because most of the rest of the market has taken a beating year to date. So that relative performance story is still very much in play for not just value in general, but especially for this index, outperforming some of those other value products out there.
And finally, Mark, if we take a look at the top 20 weights within the index, what has their performance been like over the past couple of years?
Yeah, so when you look here, the colors kind of tell a story of 2 different years, right? Most of the blue for 2021 you see is in the positive territory. This year to date, it's much more of a mix, right? So you've got some of those energy names like Coterra, like ExxonMobil, having really good 2022 year to dates on top of really strong 2021s. But then take a look at some of the other names towards the right here, especially names like DHI and LEN. Those are a couple home builders. Home builders had a great year in 2021. This year, with mortgage rates going up, they've been under a lot of pressure. They're trading extremely cheap, maybe the cheapest that any sector has ever traded in history. I was looking at the PEs the other day. They're like a PE of 3 or 4 in some cases, just really, really astoundingly low numbers. So, even though some of these areas have done really well in terms of performance in the last year or two, there are other parts of the value complex that, that are still quite cheap and still hold a lot of upside depending on, how long this reflation trade keeps going. So keep an eye out for that. Finally, we did want to mention, in terms of accessing the index, the ticker for the ETF is FTA. That's an ETF from First Trust, was launched, quite a number of years ago, about 15 years ago, and it's got assets of about $1.25 billion as of most recent checks. So a decently sized product there from First Trust tracking it.
Okay, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.